Hello everyone, Mr. Solution here. So today we are going to be looking at the MACD. MACD is one of the technical indicators used in trading. Okay, it is one of the indicators already pre-installed in some of the websites, okay, or some of the platforms used in carrying out technical analysis. So without further waste of time, let's go to MACD. All right, we've already set the coin we want to analyze. Actually, we are analyzing BTC USDT. Okay, so that's the coin we are analyzing. All right, quickly, and the time frame we are using is 30 minutes. Quickly, we go to MACD. All right, search for MACD. Okay, here is it. Click on it. Okay, it has shown. Okay, first of all, what is the MACD? MACD actually means moving average convergence divergence. This is MACD. This is the MACD, moving average convergence divergence. All right, and so the MACD has various configurations. Okay, for instance, here you can see that there are two lines. This is the blue line and the red line. Then there is this. Okay, and each of them has a name. This is the blue line is called the MACD line. Okay, this is the MACD line on its own. The red is called the signal line, and then this is called histogram. This is called from here, or this is called the histogram. Okay, this that looks like a spiral is called the histogram. Okay, so how do you get this how do you get this MACD? How do you get it? You get it by subtracting the by subtracting the 12-day exponential moving average from 26-day exponential moving average. Actually, there's a little arithmetics involved, but we are not concerned with that. It has already been solved. It has already been pre-solved before the configuration, before the software was put into the system. Okay, so it's actually different between the 12-day moving average and the 26-day moving average, and then this signal line is the 9-day moving average of this MACD line. Okay, now this histogram is the difference between the MACD line and the signal line. Okay, for instance, you can see here that the space between this and this is wider, hence the histogram is big. Same thing applies here. Okay, looking at this place, you can see that the difference between the space between them is not really that much, hence the coming closer. Okay, hence the closeness. Okay, so as the space between the MACD line and the signal line widens, so also does the histogram widen. Like I said, it is different between this and this. That is what actually gives us this histogram here. Okay, and then once more we can use this MACD to determine when to buy or sell. Okay, for instance, if you notice that the MACD line is about to cross the signal line, is a good time for you to enter the market. Okay, if you're noticing that the MACD line, for instance, here at a time it was so thin, they were touching each other, and then after some minutes, okay, we saw a separation. Okay, so actually if you were in the market and you were observing it here, it would have been the proper time for you to enter would have been immediately you saw that the blue line was about to cross the red line. Okay, so if you had entered there, you can imagine the profits until it got to this very part when the MACD line was about crossing going below the signal line. Okay, so here would have been the appropriate time for you to sell. Okay, so just know that when this MACD line crosses above the signal line is a good time for you to buy. Then when the MACD line crosses below the signal line is actually a good time for you to sell. You can see what happened here. It crossed below and price kept on falling. You can follow the chart. You can follow the chart as well. Price kept from here. Price kept on falling, kept on going down, kept on going down until it got to this very place where the MACD line again crosses above the signal line, and here would have been the appropriate time for you to enter. Okay, so until it got to this very place, price started falling until now. The trade is not really a good one for you to enter right now, because you can see that the blue line is still below the red line. So entering here, especially when you want to you want to buy, here is not the proper place for you to enter. Wait until this crosses this. Of course, remember we are considering the 30-minute time frame. Okay, so like I said, that these bars we are looking at represent, it's also called the histogram. Okay, and then you get it by deducting this from this. Okay, is that simple. So the MACD is a quick way to gauge the trend of price action, and the histogram can help to assess the velocity of the upward or downward movement. So the higher the bigger, okay, or the more steep the histogram, the more we can deduce that the velocity of the market is increasing. Okay, so whenever you notice this thinning out, so to say, you actually have to wait, because it means that something is actually about to happen in the market. Okay, so whenever you notice this thinning out, it wouldn't really be right for you to enter. Wait until some things are made clearer for you. Okay, so when you notice this close coming together, okay, you really do not have to enter the market. Wait for either the blue line to cross properly, or for the either above or below the red line. Okay, so just like what happened here. Okay, there was a thinning out. So when you notice this thinning out, okay, this thinning out, so to say, okay, when you notice how tiny it is, you have to wait. It means that a volatility, or rather the velocity, is really not that encouraging again. So you have to wait, because whenever there is a reduction in volatility, the next thing that follows is an increase in volatility. But we do not know where the volatility is going to come from. Is it going to come on the negative, or is it going to come on the positive? So hence we wait until we can deduct, okay, have a clearer view, a clearer picture of where the price is tending to. Okay, so another thing we would also have to take note of is that if higher time frame MACD crosses above signal line, it is time for us to buy. Okay, for instance, we are looking at, okay, let's just change, we are looking at 30 minutes time frame. Let's just change this to, okay, and of course, if you're trading daily time frame, if you're trading daily, where is daily? Okay, if you're trading daily 1 day time frame, your longer or your higher time frame should be 1 week. Okay, if you're trading daily, if your candlestick is set on daily, your higher time frame should be 1 week. And if you're trading 4 hour, this is 4 hour. If you're using 4 hour time frame for your analysis, then your higher or longer time frame should be daily. Okay, for instance, okay, let's put it this way. Let's say we are trading 4 hours. Okay, let's say we are trading 4 hours. Okay, we are trading 4 hours, but then we want to have a longer view of what is going to happen. The time frame we are going to use to analyze this is going to be the daily time frame. Okay, it's going to be the daily time frame. That's the 1 week time frame. Okay, so if we are using 1 hour, we should go for daily. If you're using 1 hour, you should go for 4 hours. Okay, let me make it very simpler. All right, let's assume that we are just assuming, okay, that what we are trading is 1 hour. We are trading 1 hour. Okay, currently we are analyzing our chart on 1 hour, but we want to use the MACD line to tell us whether we should be buying or we should be selling. Because we are trading 1 hour, then our higher time frame should be 4 hours. Then we go to 4 hours and look at how the market is in 4 hours. Okay, look at it in 4 hours. In 4 hour time frame, you have seen that the MACD line is actually above the signal line. So that means we should be planning our entry. Okay, that is if we are actually trading the 1 hour time frame, because for 4 hour time frame, for 1 hour time frame, your longer or your higher time frame should be 4 hours. Okay, because when you're analyzing, you do not just analyze only with one time frame. You either use 2 or 3. So preferably, the one I've tested that has actually worked is that whenever I'm analyzing for 1 hour, I go for 4 hours. Whenever I'm analyzing for daily, I go for weekly. if I'm analyzing for 4 hours, I go for daily. So currently now we are analyzing for 1 hour, so hence we are using 4 hours. So from our 4 hour time frame, the MACD is telling us that we are at M. Okay, so even though it has already crossed it, okay, that we should be buying. All right, so let's just say we also want to analyze for, okay, which other time frame? Let's say we want to analyze for daily. Oh, excuse me. Okay, let's say we want to analyze for daily time frame. Here is our 1 day time frame. That's the day represented with D. Okay, D. Because we are analyzing for daily, we should go for what? We should go for weekly. Weekly is our higher time frame that should tell us what we are supposed to do. This is 1 week time frame. Okay, let's see how it plays out in the 1 week time frame. Okay, as you can see, this is not really a good time for you to enter if you're trading for the daily time frame. If you're using daily time frame to trade, you shouldn't be entering this coin because the MACD line, that's the blue line, is already below the signal line. In other words, the signal line is actually above the MACD line, so it's not really proper for you to enter this trade. So that is all there is to MACD. It's just a very simple indicator, but then remember, like I said, you do not use any indicator as a stand-alone factor. You have to combine it with your other indicators. If you're using MACD, if you try to combine it either with RSI or the Bollinger Bands that have already been treated in other of our videos, okay, and then you should pay a particular attention to the candlestick formation and then your time frame, okay, and then your time frame, and finally take note of the market structure and the trend. Take note of the trend. Even though we have already said that the MACD has a way of telling us what trend the market is taking. The MACD has a way of telling us. For instance, from here now, we can see just by mere looking at this histogram, we can deduce that starting from here that there was an uptrend until we got to this very point of indecision. We didn't know what was going to happen. Then finally the red line, that's the trade signal line, now crossed above the MACD line. Then we now notice that the market changed its trend to downtrend, and that downtrend is still what we are noticing here, because if you look at it objectively, you can see that the blue line is still below the red line. That's the MACD line is still below the signal line, so it still tells us that we are still on a downtrend, okay, until this finishes playing out. Okay, so the MACD line can actually give you a hope, or rather will give you a pre-information of how the market is actually trending. But then always remember that most of the time these things, they are always lagging. I keep emphasizing on it. Indicators are only lagging in the sense that they show you what had already happened. So that's why it's not always good for you to depend on it. Okay, if you're trying to use indicators, make sure you combine with either 2 or 3, then pay attention to your candlesticks. Okay, so that is all for the moving average convergence divergence indicator. I hope that to an extent you've been able to understand how this thing works, and then you can actually use it to trade profitably. Till I come your way again next time, Mr. Solution.